All right, guys. So, welcome to the March 2026 edition of State of the Real Estate with yours truly, Chris Brown. This month is about pressure building in the market. We have more inventory, livable rates, more choices, bigger spread between people who are prepared and people who are just waiting. So, always telling you guys, stay ready so you don't have to get ready. So, a few things that we will chit chat about as we are going through this episode of the real estate market, giving you guys the update. Be sure to like, subscribe to the YouTube channel if this is your first time, or even if you haven't done so already. So, as we dive in, Florida inventory, 6% rates, commercial real estate opportunities, lots to chit chat about this go round. And I'm always telling you guys, pay attention to what is coming down the pipeline. Pay attention. So that being said, a couple of things that we will touch bases on: the national sales improvement. We have Florida inventory, as we mentioned already. Florida rates hovering around, or mortgage rates hovering around the 6%. We did see a decrease for a period of time. So that is a good thing. It's trying to get buyers off the fence. And then just commercial opportunities. Commercial opportunities as they present themselves, especially in the Florida market, what's really hot right now. Like I said, be sure to like, subscribe to the YouTube channel if this is your first time. Be sure to click on the like, subscribe, and notifications just because you'll be able to get this information as we are placing it out to everyone. So be sure to chime in. So today's agenda, this is how it typically operates from left to right and from top to bottom. National, so we do a national snapshot, and then we bring it into the Florida market, and then we bring it into a more local market, which is the Tampa Bay market for me. But it always gives you guys a perspective, as well as we'll touch on a few different things that are going on, especially with incentives with our builders, as well as commercial real estate opportunities. My investors are always asking me for more information. So you guys are going to get a nice scoop of information out of this market update for the month of March. So let's go ahead and keep it moving. All right, so the national snapshot that we have, sales are moving once again. So thankfully, existing home sales increased 1.7% month over month in February to 4.09 million. Sales improved after a softer January, signaling a market that is moving again. So we like motion. Motion is good, and that's what we were not really getting before in the past. We just were stuck. We were stagnant. So getting some type of motion is always good. Also, buyers are still selective, but lower rates and rising supply are bringing more people back. So with the rates lowering a little bit, people are jumping off the fence. Inventory is increasing because now you have more people thinking that, hey, I can get my property sold. So with that also being said, more opportunities, that's that shift that we see as being a buyer's market. So that's something being very aware of, where it's really shifting towards that buyer's market, and it means that there's going to be possible opportunities. So with that being said, it's not going to be like the 08, 09 crash. No, it's not going to be like that. So for those who are waiting on that, keep waiting, because that's not going to happen. But what will happen is you're going to see opportunity. And what I mean by opportunity, negotiating, where you're going to be able to possibly get into the property that you want, maybe negotiate the rate buy downs, different incentives. We see that additional incentives are continuously being added, especially on the buyer side, and even on the resale side. And when I said buyer side, I meant to say builder side. On the builder side, those incentives are there, but also really look at what the resales are. See what's really, it may not be on the surface what the benefits are, but there may be some opportunities where you may be able to get something that's already completely upgraded, and you can just buy down the interest rate. So keep that in mind. So the main message is the market is active enough to reward preparation, not passivity. So those who are being very passive still, there's not going to be much reward. For those who are staying ready so you don't have to get ready, there is going to be opportunities, and there's opportunities right now. I've been showing you guys different opportunities that have been presenting themselves. And it's all about who's going to take advantage of it, who's going to take action, who's going to just wait until everyone else starts buying. That's not how it works. You want to go ahead and find the opportunity that fits you and that you can turn into your wealth building opportunity, or being able to build wealth within your next purchase. Opportunities are presenting themselves, guys. So the national snapshot, let's talk about the inventory as well as the prices. So as I mentioned before, as we got started, the national inventory rose to about 1.29 million homes in February. So that's an increase. Months of supply reached about 3.8 months supply, still below the fully balanced market. Now, a balanced market is where there's like nothing going on at all. So even before, when I tell people we're looking at the national snapshot, then we bring it in. But always, always pay attention to your specific market, because no matter what the national is doing, your market may be doing something completely different. Like the national right now is positivity. You're seeing that, which is good. And ultimately, it's going to be good, because what happens is a lot of people, they look at the news and they're looking at the national news and they're listening to these reports as there's growth, there's opportunities. That's what gets things going. But they're not really paying directly attention to their specific market, because their market has probably already been moving, especially like in the Tampa Bay area. And we'll get to that. Tampa Bay area has been moving since even when a national snapshot of information that was been placed out there was not on the up and up, where things were like real stagnant on a national level. Things were looking kind of on the negative side. Opportunities were presenting themselves completely opposite in the Tampa Bay market. So always pay attention to your market. So median exists home prices about 398, up about 0.3% year over year. Affordability remains pressured, but price growth has slowed enough to reduce the frenzy. So I remember at one point prices were increasing so fast. So now we're really starting to see a slowdown. And if you're really looking to project, a lot of people were playing the equity game and the development game before. So if people are really trying to present themselves or see what the opportunities present themselves moving forward, really look at a growth around 3%. Before we were experiencing, like I said, in some markets, it's 6 to 10% year over year. Now we're really getting back to what some would call more of a normality, where you're seeing that 3% increase. So if you're really playing that equity game where you're looking for the property to appreciate over the next couple of years, really look at the slower rate, say about that 3%. Okay, really look at that, but always pay attention to your market. See what type of growth trends have been for your market over the past year. See what's been going on. All right, so Florida market, more balance, more leverage. Yes, more leverage, especially as its inventory increases. You're going to need to leverage the opportunity. That's all I can say. Just leverage the opportunity. Florida single family inventory increased 31.6 year over year in February. So that's a lot of inventory hitting the market. So Florida condo townhomes inventory increased 36% year over year in February. Months of supply reached 5.3 for single family and 9.7 for condos and townhomes. So as inventory increases, you really want to look to see how fast this inventory is selling. Now, if this inventory is increasing and it's selling fast, you're going to continue to see the increase. But what's happening is shows that supply, the month supply, it's reaching out to 5.3, say 5.3 for single family, 9.7 for condos. So that's an increase. You guys got to look at those increases. So, and those are actually month supply. So 5.3, those aren't percentages, 5.3 months. So core message that you guys really need to take home in this: Florida is normalizing rather than crashing. So a lot of, like I said, people were looking for the market to crash, things not happening. This is what we're going into. We're going into a normal market. As we're going into this normal market, things are starting to normalize. And that's exactly what's going on. Let me take care of this. We are live, so I do apologize about that. So, but also with that being said, you guys have had the opportunity to kind of see what exactly is going on in this market. So many people were waiting for things to crash because it took off, especially in Florida. I call it was the hockey stick, and you guys can go back and look. I was telling you guys it was going to be a hockey stick approach, but didn't know why it was going to be a hockey stick. But basically, things were increasing slightly. Then all of a sudden, it just took off. Okay, so things had taken off. So what the expectations were in Florida, those are starting to now come back to the normal market. You're not seeing that craziness that we used to see before. So, all right, so Florida prices, stability for homes, pressure for condos. So there's always all kinds of pressure. That was one of the big things that we're talking about in today's market update or this month's market update. Is because there's pressure, there's different pressure points, and we're going to have to watch those. It's going to be inventory, days on market, pricing. We're all going to have to pay attention to that moving forward. So Florida median single family sale prices held at 415 in February, flat year over year. Florida median condo townhome sale price fell to about 315, down 3.1% year over year. Condo pricing pressure reflects higher inventory, financing friction, and buyer caution. So there's so many reasons why condos and townhomes are experiencing this, where they're not on the up and up. And it's not that they're crashing, is it that they're starting to normalize. And also there's a lot of updates to the guidelines for condos and townhomes, especially for condos that are in buildings that are 3 stories or more. The guidelines, the responsibilities have completely changed, especially after Florida experienced two pretty rough hurricanes in like a 2 week period, back to back. And Florida's always experiencing some type of storms, but rules are always changing. Insurance companies are always changing their guidelines. There's always something coming down the pipeline. So sellers can still win, but pricing and property quality matter more than last year. Yes. So the presentation is key. So property quality. So with the presentation of your home, if you have your property on the market, that's what truly matters. Go ahead and take the time to do the touch up. Wipe down the baseboards, fresh, put a fresh coat of trim on the baseboards, brighten things up. Go ahead and touch up the walls. You don't have to make it exotic colors, just make it something that's neutral or something that may be the same color, but just touching it up. So I say this a lot to the sellers because sellers, you have to be mindful. You can't just place anything on the market and expect it to just sell. When buyers are buying a home, that process is very emotional. When they go into a home and they look at a home and they're looking to purchase this home, there's so many emotions that are triggering during that process. With that being said, how you present your home, the smell, the look, the touch, you know, that all truly makes a difference. So presentation is key. It's about the quality. So show the features that your home has. Make sure that you're doing the small things to make it pop. Some of the small things can be as changing the lights out. Okay, you're changing the lights out, making sure that the home is bright. When someone is doing a home tour, make sure that you have the blinds open so that the natural sunlight comes in. These are things that are triggering any potential buyer that's looking at a home. So keep that in mind if you have a property that you're placing on the market. I always tell this. I feel like I'm beating my investors over the head when it comes to this at times because they like to just go ahead and throw a property on the market because in their mind it's only about the dollars, but it's about the actual transaction. It's about the buyer experience, creating the buyer experience that makes it pleasant. Like I said, triggering all the sensories, the eyes, the visual, what they hear, the smell, what they touch, triggering everything to make it a great and pleasurable experience when they're viewing any property that you have on the market. So keep that in mind moving forward, especially as we're going into what we call the selling season. Let's see if it's really going to be the true selling season. Past couple of years, that has not been the fact. Okay, Tampa Bay snapshot or Hillsborough, Pinellas, and Manatee. These are some of the counties that I like to focus on just to kind of narrow it in. Um, Moving forward, I know Tampa Bay includes a few more counties, but just for purposes of this, if for some reason you're watching this report and your county is not mentioned and you want an update on it, just message me and I'll give you some details of what's going on in your market more specifically. So, Hillsborough County, speaking of Hillsborough County, still gives you the broadest buyer pool and most transaction volume in the region. By rising inventory is creating more room for negotiation than we saw a year ago. More inventory, more opportunity. So just be prepared, my sellers. I'm telling my sellers, be prepared. That's why we have to present very well. Pinellas County remains supply constrained in many desirable pockets. So well located single family homes can still move. And this is very true. So the inventory is restricted just because if you guys are familiar, Pinellas County is one of those counties where they are there's not that much land to build on, versus say Hillsborough County. There's a lot more land to build on. So you have that competition of new construction. You have that competition of new inventory on top of resale inventory being placed on the market. So you have that competition. When you're in Pinellas County, you don't have that same type of competition just because they don't have a lot of land to build on. So it's a lot of resale in that particular market. So family homes can still move. Yes, those single family homes can still move, while condos face more pricing pressure and buyer caution. Like I said, condos, there's new guidelines, there's new rules. People just don't know the process because the process has changed. So it's not that it's not a good purchase, but it's different things that are involved that are now moving forward. So keep that in mind. And that's condos, Pinellas or Hillsborough County or anywhere in the state of Florida. So keep that in mind. Manatee County feels more rate sensitive and builder sensitive, which means buyers should pay close attention to incentives, new construction competition, and days on market. So this is a market where you have multiple builders. Anytime that you're competing with a builder, they always have the upper hand when it comes to incentives. They're offering multiple incentives. Like, oh, we're going to offer you 20, 30,000 incentives. But really look at the fine print, especially when it compares to resale, that's newer resale. Because newer resale, a lot of those individuals have a lot of those incentives built into their current property. Like they have pre-wiring of electronics, they have different features, they have different options that they paid for upgrades for that may already be presented in these homes, which could be anywhere between 30, 40, 50, 60, even $70,000 in incentives. I've seen it. Different options that you can offer. I have a couple of sellers that are coming down the pipeline right now. When we go in the market, we're doing resale, but I'm looking at the different options. They have like over 50,000 in different option upgrades that they did to their home. So you can't do a lot of that will not be on paper. Well, you have to understand what you're looking at and what you're looking for when you're looking at these properties. So read the fine print, make sure that you're aware, but there are opportunities resale as well as new construction. Across all three counties, the pattern is the same. More options, less frenzy, and a market that rewards preparation, pricing discipline, and strong local knowledge. Yes. So pricing, let's not think pandemic. Anyone that's still on the pandemic mind, they're not going to get their property sold. Okay. Keep that in mind. Preparation, stay ready so you don't have to get ready. Okay. I'll keep preaching that because the opportunities are going to come to those who are already prepared. They've already did the legwork. They've already done everything to help them move forward. So preparation is key. So regarding the local, so how I look at this, this is no longer a market where we wing it. Buyers can really negotiate. There's more negotiation that's going on. Sellers must price their homes a bit sharper. Like I said, pandemic mindset, it's not going to get the property sold. And investors need to underwrite more carefully. So if you are in that investment world, especially in the buying and selling world, and those are my flippers, you have to be mindful of what the market is doing. If the market isn't, you can't really play the game of really expecting the market to appreciate a lot faster, or even for the property to sell quickly. So it's really as in, what features does the home have that you are trying to sell have that's really attracting buyers? What are buyers truly looking for right now? Are they looking for the features in the properties, or they are just looking for incentives? You have to know which one is which, and seeing how much meat, as I call it, meat on the bone. How much meat do you have on the bone? If you buy it correctly, make your repairs correctly, then it'll help you if you have to hold on to that property a bit longer. And that's what's been happening. A lot of that holding cost has really been getting a few folks, even me personally. I've had a couple of situations where the contracting, the permits, yes, permits, the permits have been, instead of, getting permits back in a few weeks, they're taking a few months before you even get a response. And then they're coming back with things that need to be corrected. And when you make the correction, you resubmit it. Now you're still waiting. So those are things that you really have to be mindful, and that's where that experience comes in as well. And then sometimes, even if with the experience, you're just having to, that's just the game that we're up against right now. So permits are a big deal for a lot of people. Holding costs, I just say holding costs in general is really a big reflector. So keep that in mind. Really have contingencies of having uh, that 6 months of reserves, maybe for holding costs. So keep that in mind as you guys are going through this process. Always wishing you guys the best when you guys are buying these properties, but reality is reality, and keeping it real. So mortgage rates, livable, not cheap. So we did experience a bit of a dip on the interest rate. So that was helpful. That was very helpful. It gives you, it gives everyone the mindset that, hey, this is still possible. Home ownership is still possible. Investing in this world is still possible. Commercial real estate is still possible. So keep this in mind. But a few things that we want to take away would be the 30-year fix of 5.98% February, say about February 26th, and 6% on March 6th. So you see that fluctuation. So it did drop, and then it slightly went up. So you got to catch it. Stay ready so you don't have to get ready. 15-year fix, 5.44, 5.43 on those same weeks, the February 26th and March 5th, keeping that in mind. Rates are meaningfully below 6.63% average from 1 year earlier. Ooh, yes. So that makes a difference. These we're looking at maybe half a percent. It makes a significant difference. Trust me, guys. It makes a significant difference. Stop waiting for magic rates and start structuring workable deals. Understand how to underwrite your deals when you are presenting your offers. That's what's going to be key. Financing strategy and a 6% market. So things to keep in mind. If you're looking at this 6% market and you really want to stay in this 6% market, this is what we have to do. So use seller credits to reduce cash to close and buy down the rate. Something to think about, guys. If you're at that negotiation table, also consider use builder incentives where available, especially on inventory homes. So a lot of times, if you are, and I'll tell you this, and I share this all the time with my clients. If you're in a position to actually purchase a home, and you go to a builder and they have a home already constructed, it's already constructed, that's considered like an inventory home because it's already constructed if it doesn't have a buyer connected to it. So that means that you can probably ask for a few more incentives, and they possibly are asking for or allowing additional incentives, whether they share it with you or they don't share it with you. And that's the big thing, where if you don't have representation that you may not be aware of, a lot of that information isn't put out into the public. If you're not being represented, you won't know this information at all. So that's where it's key. If you're working with someone that is active in the market, they're doing different things, and you really want to find out what the newest, the latest and greatest is. And these incentives will help out, especially if they're offering rate buy downs from the get-go without you having to put up additional money. They're already offering a rate buy down. And that does happen, especially with inventory homes. Focus on payment you can sustain without financial and emotional strain. Keep your mental health in mind, guys. Health is wealth. Keep your financials in mind. Make sure that you're making the right financial decisions that are not going to continuously stress you. You should be purchasing a home with the thoughts of relaxation, with the thoughts of being able to move forward and be comfortable. Okay. It's an emotional process. So sometimes we make decisions that we're really not thinking through. But at the same time, that's why working with other individuals that'll get you through that process to kind of take the emotions out of it and also make sure that you're aware of, hey, if we make this decision, this is what we need to think of moving forward. So I think there's a saying don't be, what is it, house poor, where you have a home but you can't do anything else. You're always at the house because you can't leave the house, you can't go out to eat anymore, you can't vacation anymore, you can't go out on the town anymore because you're paying so much towards your home. Be mindful of these incentives that are available out there so that you can have the best opportunity to still live after you get your home. Keep that in mind. Keep reserves and avoid stretching to a number that creates chronic money anxiety. Yes, keep your mind right. Keep your mind right. In other words, keep your mind right. That's what we want to do. Keep your mind right. Don't stress out, guys. Don't stress out. Health is wealth. Big advocate. Your mental health is so important. It triggers so many different things and impacts so many other aspects of our lives. So keep that in mind, keeping your mental health in place. Builders, development, and supply. So giving you guys insight about the builders, we've kind of already touched about some of the things about the builders, but no. So new home sales rose 1.8% February to 676,000 annual pace. Then we have new home inventory increased 7.5% year over year to 500,000 units. Completed, ready to occupy new homes for uh, new sale reached 119,000, highest since 2009. So let me repeat that. So completed, ready to occupy new homes for sale reached 119,000, highest since 2009. Okay. More supply, more builder pressure create room for price cuts and incentives. So keep that in mind. These incentives are out there. So that's what makes it a challenge. When these builders have more inventory, what happens is they're able to have more incentives, price cuts, incentives, and it's not all about the price cuts because sometimes it's about them. They may have it at a certain price, but if they drop the mortgage rate, it makes it that monthly payment a bit more affordable for you. So you're like, okay, well, let's go ahead and get it. We can afford it because we're making monthly payments at this point. So keep that in mind. All right, builder settlement and incentives. So builder settlement started, started 2026 at 37, showing caution across the industry. So keep that in mind. We like that to be a bit higher with builder incentives, definitely a bit higher than 37. 40% of builders reported cutting prices with an average cut of 6%. So those are some chunks, and I remember we did experience those. That we did see that decrease in prices. We saw those price cuts come at significant chunks at times. 65% of builders use sales incentives to move product. Yep, and then also keep in mind a lot of these incentives that builders are offering, it really comes down to the fact that they may control the mortgage itself as well. Like a lot of times you have to go through their financing, but they'll give you the incentives, but they want you to go through their financing. And typically there's usually, you know, different incentives and different clauses in there as well, especially if you, for whatever reason, it's not coming to my mind, but if you basically, there's a clause in there where if you, prepayment penalty. That's what it is. If you try to pay off the loan within like the first year or two, there's a prepayment penalty because they make you pay the interest. So keep that in mind. If that's in your mind to do, make sure that you're being aware of the prepayment penalty. All right, compare resale homes against new construction deals instead of assuming resale is better value. See what it is. See what's out there, because yeah, I've been seeing, some people are saying, hey, I see this property, I see this property. This resale is a little bit bigger versus, say, the new construction. with all of the incentives. So really compare apples with apples, because when I say it's a little bit bigger, I mean, if it's like 400 square feet bigger, that makes a difference, as in availability, different rooms that you're able to have. Especially if you have a family space, people working from home, people studying, um, keep that in mind. Keep that in mind. But really compare apples with apples and oranges with oranges. Investing in 2026, my investors, what's up? What's up? What actually matters? So, investors, please, in 2026, investing environment rewards cash flow, discipline, and quality assets. Get some good assets. Look at what's going to continue to give you a return on your monies moving forward. Multi-unit is a big deal right now if you're able to do so, or even adding value to current property, especially with these bungalow style homes that are on these extra large lots where you can add an ADU to it. So that means that's additional income coming into the property on the same property that you purchased. You're just building at. And depending on the market that you're in, there may be incentives for you to even build an ADU on your property. Like for instance, I know in the Tampa Bay area, I can think of one program. There's a program that's out there where they will give you 40% rebate, 40% rebate of what you say. So say if you spent 100,000 to build an ADU on your property, they'll give you a rebate of 40%. So they'll give you 40,000 back but as long as you're using that space for affordable or workspace or workforce living, whatever it may be. There may be some requirements as in what type of person can actually live there to receive that rebate. Not that you have to do that, but if you want the rebate, you will have to abide by those guidelines. Value added core plus strategies for stronger than appreciation only bets. See, this is exactly what I'm talking about. Adding value. That's how you add value. Keep that in mind. Underwrite insurance, taxes, HOA, exposure, maintenance, and tenant demand carefully. Yes. So keeping this in mind, if there's tenant demand, especially if you're planning on trying to lease the property, especially at some of the higher rates, what I've been seeing is that over time, there's been more and more projects coming to fruition where people have the opportunity to have options. They have more inventory of apartments, rentals that people can get in. So if you're buying a multi-unit and you're trying to charge top dollar, keep that in mind. What does it, how, keep your end user in mind. What is the demand for them to live in your space? Is it just getting any space at all, or is it something unique about your space? Is it like located downtown? Is it located with a number of incentives or amenities? Does it have is it specific to a niche of professionals? Keep that in mind. Make sure that you're running, especially taxes and insurance. That's a big deal right now. Look at the taxes, see if there's some incentives that may be offered for the type of clientele that you're looking to house. There may be some, I want to say with like workforce construction, workforce living, that there may be some incentives with that. I'm not sure if it's taxes, but there are incentives out there. And I can't speak specifically because I know each county is definitely different. But best local opportunities likely come from mispriced inventory and selective redevelopment. So keep in mind that the development of these opportunities, it's redevelopment, you're going to see that a lot. Different infill projects that will be coming down the pipeline as well. Commercial real estate where smart money is moving. You're going to see a lot of this. CBRE expects U.S. commercial real estate investment activity to rise 16% in 2026 to 562 billion. So commercial real estate, there's going to be some opportunities. I know I keep an eye on it with the commercial real estate, just looking at the different investments, uh, multi-unit, multifamily. That's very big right now, especially in the Tampa Bay market, Florida market, and I want to say nationally as well. So multifamily is the top target in U.S. investors, followed by industrial and logistics. So keep that in mind when you guys are looking at these opportunities that may present themselves. Data centers are one of the strongest commercial real estate stories because of AI demand and driving record. Yeah. So you're going to see a lot. Data centers have been out there for a minute right now because of AI. Things are moving fast, and I think one of the professions, I was speaking to another avid speaker, and he pushes people that are electricians. That profession is not going anywhere. AI is not replacing electricians at this point in time. So keeping that in mind, these data centers need electricians. So office remains selective. Yeah, office remains selective just because it depends on the market. You know, if you are having a lot of these bigger companies come to your market, office is helpful, but quality income producing assets remain in demand. So quality income producing, what produces, commercial, multifamily, keep those in mind. But office remains very selective, depends on the market. So be selective, and also location. That's going to be a big deal moving forward. Why Tampa matters with commercial real estate. So commercial real estate, give me a moment here. We are going to make sure we are good to go. All right. So, like I said, guys, we are live. So it's one of those scenarios where I wish I can say, hey, let's just take a break for a moment. Um, I can't do that just yet. So let's do this. I am going to sneak over here. All right. So we're back at it. All right. So we're back at it. Let me get back at it here. All right. So Tampa ranked number 7 among top U.S. investment strategies for commercial real estate in 2026. So high expectations. Tampa benefits from population growth, business migration, and long-term housing demand. Yes, especially being in Florida. A lot of people are just moving to Florida because they just want to be to Florida. But especially in the Tampa Bay area, um, it's I would say Tampa Bay, say 20 years from now, Tampa Bay is going to be really looking like South Florida. I think that's the idea. It's going to look like a version of South Florida. So still a ways away, but that's the mindset of a lot of people. Multifamily industrial remain especially relevant in the local story. This gives Tampa Bay a broader investment narrative beyond single family housing. Yep. So that, especially that industrial, and actually that's something that you'll probably see a bit more from me about as well, that industrial. So opportunities, um, and what we can actually take away from this market update, because this has definitely been an involved market update. Opportunity, buyers have more leverage because inventory is rising and sellers are more negotiable. Yeah, they're a little bit more flexible these days. Totally agree. Another opportunity, investors can find value in disciplined acquisitions and redevelopment. So understanding what you are going to do with that property and being disciplined with the plan. Buyers who ignore true carrying costs can still overpay. Yes. So that carrying cost is going to be big right now. It's huge. So keeping that in mind, the carrying costs as you're moving forward. March takeaway, inventory is rising, rates are livable, and real leverage is back. Yes. With the rates where they are right now, guys, we are starting to see more of an opportunity. People are they feel that they can see themselves making a purchase, you know. And as it went down to a bit and it went back up, will it go back down to, I think we were just below 6, just a smidgen below 6%. So those are the things and why you need to stay ready so you don't have to get ready, because those opportunities are going to present themselves. So you want to be able to pull the trigger when the opportunity presents itself. All right, guys. So typically we do the Q&A. I did have a number of questions that came in. And I try to answer them as we go through the process. So keep that in mind. If your direct question was answered earlier, that's why you need to pay attention. Pay attention, guys. Pay attention to the process, because what does happen is I do answer a lot of these questions as I go throughout the process. So when you guys are sending in the questions, the chats, I do see those, and I definitely appreciate you guys chiming in and letting me know. I truly like the engagement. So the questions are helpful. I appreciate you, and I make sure that we try to get the answers to your questions. Some rhyme or reason, some kind of way, we get it done. So with that being said, with the Q&A, I know we had questions regarding, the interest rates. We did go over the interest rates. Still, feel free to go back and take a look. Opportunities for investors. Yes, investors, there are opportunities, whether it be commercial. Really look at the multifamily. Really, truly look at the industrial aspect, as well as moving forward with other opportunities, the development opportunities. See how, especially depending upon the market that you're in, see how redevelopment may be able to help you. If you're taking current property and maybe rezoning it, I'm seeing a lot of that, a lot of rezoning coming down the pipeline. Seeing a lot of rezoning coming that actually has been a big interest. And then also paying attention to the multifamily. If it's opportunity to build multifamily, there's going to be different guidelines. Something that I'm really looking into, or sorry about that, something I'm really looking into is the co-living space. Really going to see how that takes. I'm seeing different on a national level. I'm seeing a huge increase in co-living, but for me specifically, I want to look at the Tampa Bay market, see how that's going to impact moving forward. What does that mean? Co-living, is that going to be a situation, or is it going to be a space where cities are starting to adopt it? Do they put it out there to the masses, or they slowly, because whenever something's new, if you put it out there to the masses, there's always somebody trying to find a loophole. So it may be something that may be coming down the pipeline. I'm very interested in seeing more of that. And then investing in some co-living spaces as well. So if you have a property that's, I don't know, has 4 bedrooms, 5 bedrooms, and you can house, rent out each room, and the language that they use is completely different. It's a membership. It's not a rental, which I like totally. So if you're not familiar with it, be sure to follow me, because as I get more insight on this, I'm going to be getting more into the process and more have a better understanding of what I need to do to make it happen as well. So keep in mind, guys, this is March. March. Things are happening. Looking forward. If there's a situation where you want to connect with me, feel free to schedule a one-on-one. You should see a link there where you can do a one-on-one with me. If you have questions, continue to chime in. Would love to connect with you, as I typically do. As people reach out to me, they send me their questions. Typically, they're not watching live, but they're watching the replay. So if you're watching the replay, feel free to go ahead and chime in and connect with me. But with all of that said, guys, we are tuning out. This was the March episode for State of the Real Estate Market with yours truly, Chris Brown. I appreciate you guys tuning in. Looking forward to keeping you up to date with the market and any other questions that you guys may have. And for those who haven't already, and I'll make it known, make sure you chime in for the next Real Estate Gold Digger Challenge. We have a challenge. It's a challenge that I put out there to everyone that is looking to build their real estate portfolio in 2026, or just moving forward. Let's go ahead and let's grow big. Let's grow big. Let's do some things. Let's make some things happen. Chime in. Make sure you get signed up for that as well. Take care.